Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bullish scenario on the weekly time frame where we're looking for a bigger 5-wave impulsive structure to the upside in yellow, currently working on this yellow wave 3 with an internal impulse in green 1, 2, 3, 4, 5. The common target area for your wave 4 is the 382 to the 05 Fibonacci, taken from the low of 2 to the high of wave 3, giving you a target between 57.6k and 53.3k. The invalidation for this scenario is the 0.618 at 49.3k. We then go to the 1 hour time frame. The bullish scenario on the 1 hour time frame is that we have an impulsive structure to the upside in a wave 1, looking for a 3-wave corrective structure to the downside in a wave 2, and then continue the trend to the upside in a wave 3. The common target area for your wave 2 is the blue box, the 05 to the 786, taken from the low to the high of this blue wave 1. A uncommon target, but a target nonetheless, is the 382, and the 886 is very rare. Now your common target area sits between 61k and 58.4k, and the 382 is at 62k. We do have some additional support in this area. First of all, the daily naked point of control at 61,750, and then around the golden pocket we have the blue box over here with some extra confluences between 59.4k and 60k. The bearish scenario on the weekly time frame is a bigger irregular flat structure. A regular flat in general is an uncommon flat pattern where we have a wave A, B and a wave C, but wave B only retraces to the 1 to the 105 Fibonacci, taken from the high to the low of wave A, which is the common target for a regular flat, but the most common flat pattern is an expanding flat where the wave B target is above the 1.236 to the 1.38, 98.2k to 122k. By all means, in this scenario, we're then looking for a bigger impulsive structure to the downside to take the lows of wave A at 15k. Common target area for your wave C is between the 1 and the 1.236 trend-based fib extension, taken from the high to the low of A to the high of wave B, giving you a target area between 16.5k and 11.6k, with the extension target for C being the 1.618 at 6.5k. The best area of support to the downside is the golden pocket in confluence with the value area high of this multi-volume profile, sitting between 10 and 9k. For the weekly bearish scenario, where this is the end of your wave B in yellow and we're looking for a big wave C to the downside, we need to start this structure with impulses. So here you can see a double 1-2, and then you want to have a very big wave 3 to the downside. However, there is 3 reasons why this scenario has lower probabilities compared to the more bullish scenarios. First of all, the 886 is touched for wave 2 here, taken from the high to the low of 1. Rare target for a wave 2, common target for a wave B or a wave X, increasing the probabilities that the price action that follows after is corrective, which therefore increases probabilities to sooner or later take the double top. Secondly, this blue wave 1 here is longer in price and time compared to the red wave 1, even though the red wave 1 is your higher degree Elliott wave count, because in red we have a 1, 2, 3, 4, 5, and then inside the wave 3 here, the red wave 3, we have a 1, 2, 3, 4, 5. So blue is a lower degree Elliott wave count, and preferably, therefore, wave 1 and 2 are shorter in time and price. It's not necessarily a hard rule, but it's more of a guideline, and it does lower the probability that blue 1 is longer in price and time compared to the red wave 1. Finally, if your end of 2 over here is in, then we have a running flat, a wave A, B, C, where wave C did not take the high of wave A, which is an incredibly rare flat pattern. Preferably for this scenario, you would have an A, B, C with C ending above the high of wave A, but based on the local structures, the probabilities are decreasing that this impulse is not yet finished in the 1, 2, 3, 4, 5 because of the local move to the downside, but we continue to observe, of course. Even if price would move towards the upside now to finish a potential impulse, then 1, 2, 3, 4, 5, finish 2 and C above the high of wave A, this wave 2 is going to be longer in time than the red wave 2, which is reflected by the vertical line with the 1. This is a fib time taken from the low to the high of this red wave 2 to the end of this blue wave 1, comparing red 2 with blue wave 2. And if we would move to the upside now, we're going to end this is wave 2 and therefore wave C after the 1-to-1 over here, again reducing probabilities for this scenario. On the lower time frames, however, if the end of 2 is in, we're looking for a much bigger impulsive structure to the downside where you easily want to take this low with a wave 1, 2 and then a very big wave 3 to the downside. Locally, on the 15-minute, price here touched the 886, taken from this low to the high, which increases the probabilities that any move towards the upside is a wave C or Y, which in turn increases probabilities to take the lows over here. We do have some CVD divergences, however, we only have them on the 1-hour chart. Really, there's not too much happening very locally at the moment. Higher low in price, lower low on the CVD on the 1-hour chart. So if I refresh AGGR, go to the 1-hour time frame, then you can see here higher low on price, lower low on the yellow CVD, which is a bullish CVD divergence. However, what I would like to see is also some more local strength, right? As long as we keep moving to the downside, absolutely fine. We're going to be looking for the support areas as well. And then at the support areas, we want to see some extra proof of support. So market structure changes, candlestick patterns, maybe a bit of a bounce retracement and bullish CVD or RSI, MACD, whatever that is for you. So if we then go to the probabilities of the different scenarios, and on the weekly time frame the probabilities are higher for the bullish scenario till invalidation is hit, and on number 2 we have the bearish impulsive scenario. On the 1-hour time frame the probabilities are also higher for the bullish impulse compared to a bearish running flat and a bigger impulsive structure to the downside to new lows. And on the 15-minute time frame the probabilities at the moment are higher to still take this local low and then possibly look for that daily naked point of control here at 61,750 or the lower support. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.